afternoon, good evening, good morning. Don't know where you are. A lot of guys are spread out across the world now. So Monday, Monday 6:30 a.m. over where I'm at. Sunday 6:30 p.m. on the East Coast. Sunday something like 3 o'clock in the afternoon, 3:30 in the afternoon on the West Coast in the U.S. And welcome to week number 29. In fact, let's start with that. Week number 29. Where are we? There we are. It is week number 29, so make sure you go over on your checklist and check your boxes because you're counting the days that you have left, not the days that are coming forward. You want to hit those goals because, again, you only get so many weeks in your life. And you got a reminder of that over the weekend when either, you got to be a little bit sensitive to this because it all happened yesterday. Trump got shot in the ear. Be sensitive. A large majority of people are Trump supporters in the room. I completely understand that. Large majority of people don't like Joe Biden. Completely understand that. There's a lot of conspiracy going on about why it occurred, how it occurred, and let's just focus on the details that we're trading. It's all that we're doing right now is we're trading. So, on to the SPX. Man, we literally, the month of July has, it's only 2.64%, but the month of July has just been absolute dry fist hemorrhoid checking. Get out the way, get out the way, bitch, get out the way. 7 consecutive green days in a row going into that CPI report on Thursday last week. 7 consecutive green days in a row. The longest streak that we've had the entire year. I remember in the emails going back, we had 8 twice in 2023, and you needed to go back to prior to COVID, well back into the 2018 bottom to find 8 or better than 8 consecutive days in a row. Just absolutely face ripping. And then we had our CPI report, and again, this is a fucking video game, man. On Tuesday, it was the Jerome Powell, speaking to Congress, speaking to the House on Wednesday. On that Tuesday, nothing. On the Wednesday, again, nothing. And we went up, we broke the safe edge, which was easy to do because range had been so constricted. 20-point range on Monday, 16-point range on Tuesday. And then we turn around on the CPI report. Not only did we get that minus 1% day after almost 50 consecutive days without one, but they did it by 1 point. Literally 1 point. And it slipped my mind. Apologize. It slipped my mind because I was so dedicated to there is absolutely no way they are going to put in a green week. There's no way, especially with the move that we had on QQQ there, 12.5 points in the regular trading session. 2.43% drop on QQQ in the regular trading session. And they turned around and did it anyway because, again, I completely forgot. You get a minus 1% day. The next day, you get a plus 1% day. And what? We busted up above that 56.40, 56.55 for a new all-time high yet again. Back to back to back to back to back to back to back. New all-time highs coming every single day. And at the end of the day, they sold it all off. Right at the final hour, and you guys just need to go and check there in the chat room and see what happened there with SPX Scalper, Nancy. A couple other people traded in there. Gilly, I saw you made a couple of trades as well. 60 cents I think I still have it up here because I was tracking it. 60 cents. That last hour when I said, the degenerates are getting into the 5640. And I mention it as degenerates because it is Friday. It has been a long ass week. And if you are still out there day trading on those 0 DTEs that are expiring on Friday, man, you really got some juice in your veins. But anyway, yeah, 60 cents, 30 bucks. So your $60 went to $3,000. Nancy's $60 when we got to 56.70, 56.24 on the dip. She took it off. They were right around 17. And because SPX, you don't need to close. You can hold it, let it go to the end of the day. It'll settle out in cash. 60 cents, 30 bucks. 10 contracts, $600, 30 grand. 5 contracts, $300, 15 grand. Like I've mentioned to a lot of you that I spoke to on the one-on-one calls over the weekend, this is what the audience expected of me for the first 5 years, 6 years that I ran 32 trades. So this is what my eyes kind of look for. And it just happened to be that on Friday, because, again, like I was mentioning, 56.24 is the Fibonacci. That's what we got. So anyway, that's what it is. Again, this has just been euphoric. But staying on this subject here, this is 6 green weeks in a row. With that one at the end of May, that one where we hit that 51.91, red week. The week prior to that, I am not calling that a red week, closing down less than 1 point. I am not calling it a red week. I'm calling that a green week. Because they didn't close red, that was a green week for me. Because prior to that, you had 4 green weeks in a row going into that questionable week ending May 24. And that was, again, right there, that was when NVIDIA invented AI all over again. So here we are, 11 green weeks, 6 in a row, going into OPEX week, going into a week where there's very little out there, and Trump got shot. So you're essentially pricing in the fact that Trump is the new president. So where are we? We are going into Monday, tomorrow, 350 trading sessions without a minus 2% day. 351 was the most recent, longest record of consecutive trading sessions without a minus 2% day. And that was started shortly before Trump won the election and went into the end of January of 2018, where the minus 2% day came after a minus 1% day. So is it possible? Is it on the cards? Is it on the table to actually occur this week, considering it's a pretty slow week? This is a week where you get BlackRock, who's funding the round-tripping of all of these AI stocks, double recording revenue, which isn't real. There's a lot going on this week with financials, but the only major name that's reporting is Taiwan Semiconductor. So on Thursday, we are going to very, very closely be monitoring what's going on with Taiwan Semiconductor and SMCI, since it's still above the 89-day simple moving average. So here we go. QQQ, red week. Red week, down 2 points, red week. After 1, 2, 3, 4, 5, there's your 1. 1, 2, 3, 4, 5, there's your 1. Your big bottom there in April. From that move on April, just from that move on April, this thing is up 20%. All in this AI bubble. So anyway, we are obviously going to be monitoring QQQ, being in a trade on QQQ as well, and then we come over here to the IWM, and we finish off with the spreadsheets, and we move on to the charts. red weeks, 5, 1, 2, 3, 4. Oh, sorry, 4. 1, 2, 3, 4 red weeks. Finally get a little green week, a little tiny green week prior to that, red week last week, and an absolutely fucking face rip euphoria week coming with a 6.68% move off of the lows on Wednesday into the highs there on Friday. And this is the second time of the year, March 28, and right over there at the April top before the big drop started over there in April, that we've been up here in the 2100s, or the 210s. Second time of the year. Came up there for a little quick visit one day, March 8th, but yeah, second time of the year. So obviously the IWM, very attractive as well. Couple of big gaps to be filled over there on IWM. The first one you can see right here, 212.66, 210, and then you've got your 206.94 down to 203.37, which brings you into that line, 203.69, which you are, if you're trading IWM, you're pretty familiar with it now. 3 back-to-back plus 1% days. Not tracking any of that because the volatility in IWM is absolutely fantastic, and you're overbought, which I'll get to in a minute. So leave you here and move on to the charts, and we'll look over here at the futures because, again, futures are open. I'm looking only, because this is what I watch, is the 1 hour charts, only because I need to see where I can get a bigger, wider, longer move, and how we look for a bigger, wider, longer period of time, since when we are doing spreads or we are doing 0 DTE options, they expire at the end of the day. They don't expire in 10 minutes or in 15 minutes. So I need to know that if somebody's getting into a trade, they have a very good probability and possibility that they can hold the trade through the end of the day and not have to worry about monitoring it, going in, taking a day trade, because some people don't have the ability to do day trades. So here we are with futures, and futures are pretty much flat. Where are we again? Zoom, and here we are. We're at 56.16. We're up 1.5 points. So that's our futures coverage, and I will move you over on here to the VIX, because again, referring back over to the spreadsheets, because you need to see what you need to see, and good volatility last couple of days. 50-point range, 49-point range, 66-point range, 65-point range. Over here on your SPX, you had your plus 1%, minus 1%, plus 1%, and then your decline there into the close, down about 40 points. But your VIX, where are you? Your VIX, where's the VIX? There's the VIX. You're sleeping like a dead donkey. Nice to see 1255. Nice to see it's been holding around 1255. But it's a dead donkey. Wider view, come out here and you see, yeah, we're holding above that 1189. We haven't left the hope out of the bearish view that, there's a possibility that this could actually work, which, when I say that, is when you see the VIX puke off the 1255 and just go straight on down to 1189. The hope is there. And the hope is for 1339. And at 1339, that's where it gets, you know what, that's it. Yeah, you bears, you got your dip. You got your little dip. Because getting back up to 1410 at this point in time, I'm not trying to be a dick, but they would have to take out Biden and Trump on the same day and leave it that the options are who fucking knows and Kamala Harris. That's the only shot we got at seeing 1410 in this short period, today, tomorrow kind of thing. So that's enough with the VIX. I'll move that off here and bring you back on to what we're looking at, which is dedicating to strictly on the SPX right now and on your QQQ. So this is our default that we've been tracking, that we have been kind of monitoring and looking for our tops, and doing pretty fucking good with it until we got this fucking July start where it just ripped everybody's face right off. So looking at this from the April lows and looking strictly at where this wave is, not trying to decipher which wave this is. Clean 1, 2, 3, 4, 5. 5 having topped up here at a very extended level, which coincidentally right here on your 5, and this is a little tricky, kind of drawing that I've used in the past. Your 161.8 retracement of, there it is, your all-time highs and your 2022 lows. Your all-time highs being the January 2022 down to the 2022 lows. And your 161.8 retracement, that brings you right up here, 56.38.73. And as you've seen twice now, you've kicked right off of it. Right over here at 55.48, this is your retracement down to the June low from the January 2022. 54.41, this is your retracement to the May low. Down here at 52.53, this is your retracement to the beginning, to the Russia invades Ukraine low back in January. The algorithm sees these. The algorithm knows these. You can see how we gapped up above it over here on May 14th. Over prior to that, where we were back in March, we were having a lot of resistance in that area, and everything was working good. So anyway, long story short, very much topped out with a very clean looking 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 within this, and the decline for a red week, and also just the decline to clean things off. We should be looking at a move down to around that 54.85, 54.48 area, right into this zone where we were prior to this. On a alternative view, we're looking here at this being wave 1, this being wave 2, and what we have now here is the bullish wave 1 of wave 3, the bearish wave 2 of wave 3 due to begin, and you really don't want to see this. Eventually making this way up into the 5900s, 5820, 5970, but that's still not it. Eventually making it up to around 6120. I don't agree with this view. It doesn't fit into any views, but that's what's there up above, and that is the alternative as of right now. The default that we are working with here is we've completed our 5 waves. We're looking for a drop down to around 54.88, 54.40, 54.48, 54.88. In that zone where we were before, and I'll show you again. And again, to bring things into context, the full moon is taking place on July 21. From a full moon point of view alone, just only the full moon, what we should have, all right, I'll move that out. What we should have on the full moon is, I disagree with it being a higher high at present, and that being it, finished. I disagree with that. What I do agree with is the full moon coming down and placing a full moon low. Very similar to what we had here in April. Very similar to what we had there in October. Not necessarily meaning that it is a bullish catalyst to the upside, but meaning that the full moon comes in, and it comes in at the lower end, right around that 54.48, 54.88 area. And then we go into tech earnings, and then we go into the FOMC meeting, and then we go into the beginning of August, where that fits into a very different view, which I'm not ready to share with anyone because it's way too advanced, to where we top out a little bit higher, right around 5,700, 5,740, and then we start to get to our decline into the election. So that's what's on the table for now. Looking here at the SPX, making everything simpler because it might have been a little bit too advanced what we were talking about there. Looking here at the 20-day period. Boom, boom, boom. Again, could not fill this gap from CPI back in June. Bam, right up there into 54.85. 54.85, 54.46, 54.85, 54.46. Just killing it, crushing it, absolutely destroying it constantly. Bang, 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 bang. And then we go into July. And as July begins, came down to 54.46. We knew 54.46. The very next day, on July 2, futures were down. Futures had taken out 54.46. Taken it out right around 7 o'clock in the morning. But we were oversold. We were oversold on our futures. And thus, mentioned in the room, we're looking for 54.85. We blew right through that motherfucker. Just blew through it. And it just went non-stop up until we got here into July 8th, the beginning of this week. Last 5 days. And during this last 5-day period, like we shared a little bit wider, that 55.51 has never, ever been tested. This 55.59 has never, ever, ever been tested. This 55.63, we did test. We got it there on Monday. We got it again on Tuesday. Or sorry, we got it Monday and Monday. Fucking whatever. We ain't broken down below 55.75 since that time. We have a gap that's here from Tuesday or Thursday. We have a gap. 55.75, that's what's cream and that's what's important. And when you refer back to your spreadsheets and you look at where you're at, look at what you're starting with, your 55.73, that was your week. That was this previous week. That was just the weekly candle, which just didn't get fucking taken to. Your lows, there's your lows right there. 55.62, 55.74, 55.86, 55.76, 55.90. So you can see right there where your 55.75 fits. 55.78, 55.72. These are your low closes. 55.75. For now, until we have anything that proves us wrong, that 55.75, that's our support for this week. And you can go there and literally see it with a blind eye as how the 55.75 is our support level. So that's what we're working with. We're working with that 56.24, all right? We're working with the 56.24. We're working with the 56.38.73. Those are our, okay, this is a little bit too euphoric area. We're working with that 55.75 being our support area. So we're in a really tight range. We're in a really tight zone. And we've got a really low VIX. So there's nothing screaming and hollering that we are going to get a dip down to that 54.85, 54.46 area. There's nothing out there screaming it. Nothing at all. But we do have 6 consecutive green weeks in a row. And we've got an extremely overbought Russell 2000. So I bring you over here onto the QQQ. QQQ, going back to mid-June. Bang, bang, bang. 10.5% move off of that April bottom, or the May bottom. Bang. 3.25% dip. And then as we go here into June, into July, breaking that resistance area that we came to 3 times, going right through it, ba-boom. 6.5%, 6.7% move up to that 505.21, and then your 3% drop within a day. A day. And then your move up on there on Friday, just to go fill the gap up, get that plus 1%, and wound up closing the week red. We've not got our breakdown yet. Our breakdown being that we're breaking back down into this zone, this 486, 483, and with that 478, 473 support with a hell of a lot of gaps down below. I'll just show you here a short view of the gaps. Gap, 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 and we're only going here down to the April lows. Big CPI gaps. These are mainly CPI gaps, what we're talking about. And you come into your wider view going back there into to the October lows, and again, it might be a little bit too dirty for a lot of people, but those are your gaps. These are all your gaps that have yet to get filled on QQQ, and they will get filled. Whether you like it or not, they are going to get filled. So this one has been filled, and this one has been filled. They will all get filled. But with earnings coming up over here on end of the month, FOMC meeting end of the month, beginning of August, the big ones, Apple, Amazon, I don't see anything whatsoever screaming and hollering saying This is going to be down below 470. This is going to be down into that 440 area this week, next week. Nothing. Nothing at all. Nothing. So you come onto your NASDAQ. And we're looking over here at the NASDAQ from a clean point of view. And again, having gone into CPI, extremely overbought. The dip that we got us a little bit oversold. Not really, but we cooled the chart off. That's what volatility does. Starts getting it wiggle because you've got only a certain number of candles which calculate into your technical analysis. And if your candles are up, down, and very, very tight or, slow moving, then it takes very little to get you overbought, very little to get you oversold. So this little wiggle that we got, being that 2.5-3% dip that we had on the QQQ, not on the NDX, but on the QQQ, it's a nice little wiggle. It's a wiggle. So even though we did not get oversold on the dip, a nice little wiggle to the downside where the move down, bang, I'll take these 50-day moving average off because it is irrelevant, and the 100-day moving average off because it is irrelevant. But with the move down and then our bounce there on Friday, what should occur is to get a little bit of a wiggle, bang, bang, and come back down here to around the 100 extension, just below 20,000, which would take you right over here back to the June 28 highs, and to bring you over onto the QQQ and look at this as to what we watch, and look at it for the June 28 highs. And here's your June 28 highs. Your June 28 highs being right there, right around that top of that resistance area, right around 486, 480, 488 area, should be what we're looking for. A follow through. Don't know, but that's what should be there, is a follow through. And we can look at this as well as pretty clean, as a 1-2 perfect hit to the 200 extension for the wave 3. See a wave 4 decline. Again, questionable, but looking for a wave 4 somewhere down here around that minus 20,000. As long as that holds right there in that zone, doesn't really violate this wave 1 area. Very tight, very, very tight, 1994 and 20,000, 6-point range, but right around to this area, and then we should see that wave 5 to the upside, pop to the upside as we get tech earnings. So that's what's being watched. Move on over here into the Dow, into the bigger, broader, wider view of the Dow, and you got a little pop, little itty bitty pop over there on the Dow, up above that area, which was holding there for quite a while. Looking here at a 6-hour, which is kind of inapplicable, but come on over here onto the daily, and as you can see here, the daily just starting to reach into being overbought. Very similar to what we had over here in the middle of May before we had that decline. So just getting into overbought over on the daily on the Dow. I don't see much of a catalyst for the Dow to push any of this to move forward. And then you come over here onto the Russell, where the Russell just had a absolute bang, bang, bang move off of that 50. Right on that 50-day moving average, right in this just troll area forever. And then out of nowhere, because of CPI and PPI, roll out of the NASDAQ, roll into the Russell 2000. Big overbought. Now you've got a very clean sell divergence over here on the Russell 2000 on the 1 hour. Come on to your 4 hour, and you are overbought on your 4 hour. New 52-week highs as well. And like I shared over there on the charts, looking at the IWM for its second visit up into the 210 area. And you come over and look at your IWM. So again, yeah, 207.21. I was wrong, talking about 207.69. 207.21 is the decline that I'm looking for on the IWM. Got a gap to be filled over here from Friday. You've got your CPI gap to be filled as well. I'll take this off. Equities don't show. Boom, boom. And there you go. These are your two gaps to be filled from the recent 2 days, actually. And bring you back over to 207.21. Realistically, back to 203.69 to fill the CPI gap. And Again, being in the 207 puts, 207, 203.69, you're about 100% on those trades. So that's the whole view on that. So really, that's what I've got to leave you with, and all I can finish you off with, if you are still paying attention and you are still, kind of going through, rate cuts. Rate cuts. Fed fund traders are pricing in 5 rate cuts in 2024. Well, we are into the 29th week of the year. We haven't had a single rate cut. Rate cuts. So I went through all of the Fed's rate cuts in history, all of them. And I'm a little bit early on this one, I believe. Yeah, whatever. 1990, the Gulf War recession. The first rate cut came over here in July. I don't know what this 1990. Yeah, 1990. There was our first rate cut. First rate cut in history. And you see the decline that took place after the rate cut. And there again, this is 1990. You can pull out a chart in 1990. Actually, you know what? We're here. Why not? SPX. Let's look at SPX, and we're looking at custom 1987 and 1992. Bang. And here is your Black Monday. Your big sell-off here coming off of the August 87 into that October Wall Street crash in October. Boom, the rate cuts took place, and as you see this incline as it came back up to it, boom, that's when your rate cuts started. So take you off that, take you back onto the regular screen. That was your first rate cut. Not a good thing. And then you had all of your rate cuts after that, because as you can see, they were literally cutting rates like every other week going here into 1992. Those are your rate cuts. Here are your Fed rate cuts in 1994 for their quote-unquote soft landing. First rate cut, bang, sell down. Second rate cut, a little bit of a rebound, bigger sell down. And again, we're in 1994, 1995 here. So let's bring you back over to the chart, change our view, and we look here at 1996. And as you can see here with what we're talking, we didn't do much during that period there in 1994. We had our big run coming off of that big bottom. Didn't do much. So bring you back again. These are your rate cuts 1994, 1995. They are not bullish catalysts. They just aren't. Here's your Fed rate cuts in 1995, 1996 for the quote-unquote mid-cycle adjustment. Bang, bang, bang. Nothing but bullish, but again, this is 1995, 1996. There was something called the dot-com that was being invented back at this time. Everybody remembers you had Windows 95. That was because we were in the midst of the dot-com boom, which started back, call it the early 90s. And here's your 1998 global currency crisis when the Asian currencies collapsed. You had the fucking, forget the guy's name over in Japan that was shorting the Nikkei, wound up crushing the yen. The Thai baht got absolutely destroyed. And here's your Fed rate cuts during the global currency crisis. They don't happen at good times. Bang, bang. And here's your Fed rate cuts coming after the dot-com boom, which took place right there in March of 2000. Ba-bang, 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 ba-bang. We're going to save this. We're going to save this. They never wound up fucking saving it. And that was your crisis. With here, right in here, that was your 9/11. This is 9/11 right here. So as you can see, we were already headed to the downside. 9/11, I'm not going to get into that, but 9/11, those are your rate cuts. Come over into 2002, 2003, the flagging recovery, low inflation rate cuts. Right after we had bottomed there in 2002. Rate cut, rate cut. But again, the S&P had just dropped 50% in a better part of 19 months, 18 months. These rate cuts, I wouldn't go in there and start saying, oh, but these rate cuts, they're bullish. We sold down 50 fucking percent. And here's your 2007 top. We come over here in July and we hit the dot-com highs, recovering from 2002, right to the dot-com highs, and bang, a minus 12% decline. And that was where they made the first rate cut. And then they made the second rate cut. And again, all during this period and a year prior to this, everybody knew that the mortgage crisis was a big bubble that was going to absolutely implode. We come back to the dot-com highs. We go a little bit higher for a new high over here in October of 2007. And then they just start cutting rates. And by this time, they can't cut rates because they're fucked. And here it is again over here into 2008, going into an election year, and this is where Obama wins. And you come out here to our recent 2019 rate cuts for the mid-cycle adjustment after they announced at the end of 2018, which created that minus 20% decline from October into December, Christmas morning. The rebound that we had when they said they wouldn't raise rates anymore, coming right over here, as you can see, the 3,000, right back to the highs, 29.40.91 from October, a couple of points higher, and then bang, your sell down. Back over here to 28.21. Rate cut. Back up there to the top. Recline. And again, this is your July into August, into September, into October. Typical volatility of the season that you get. And then your second rate cut over here coming at the middle end of portion of October, beginning of November, right up into something they called COVID. So I've got it somewhere here to look at. And again, talking about the 6 green weeks in a row, 11 out of the last 12. And again, we go back to this whole I am not a crook Richard Nixon because of that move that we had coming off of that October low of 2023, where they had 20 green weeks and 3 red weeks during that period. And then after they got their very, very nice decline into the early portion or during the middle portion of 1971 into October, they went with 14 green weeks out of 16 and recovered when Richard Nixon got busted. I am not a crook. Come over and look at your .com, and just looking at the .com alone on how the .com worked coming off of 1998, the final wave, 220, 120, 500, 245, 220. Wave 2, wave 5 equaled wave 1. Was a perfect move as far as looking at these waves to the upside. And then you had your decline. And by 9/11, we had already sold off all going back there to prior to 1999. But I think the bigger picture here of going back and referring to is 2012. 2012 having come off a 20% correction going into October. And then the Q4 of 2011 green, the Q1 of 2012 green, consecutive green quarters, a massive move, 400% up, almost 400 points up from the October lows. And we peaked right there at April the 2nd. And during the course of that year of 2012, peaking here on April the 2nd and declining into July, into June, coming right to the open of 2012, and then moving forward into September and selling back down again into the election. This 2012 is the one and only, sorry, I'm wrong. This right here this year to date, this is the only election year that never had a decline. The only one. This little dip that we had here in April. That was it. What was that? 5%, 6%. That was it. And as you remember, as we went into the April bottoms, screaming about being oversold. So, again, it's a little bit of a ramble. It's a little bit of a bigger, broader picture, more than it being a narrowed-in picture. But that's where we're at. We're at the edge of the edge of the edge of the edge, and as frustrating as this has been, going into the April high, going into this bounce off of April, because it's on both ways. Unless you're using the 89-day simple moving average as your support level to go and get long 3% of your portfolio and have everything else left in cash, this is frustrating as fuck, where you can't logistically buy the dip, and getting short, you've got to have such a minimal amount of risk out there because there is no dip. So we're heading into a OPEX week. This is options expiration week. We've got 6 green weeks in a row on the SPX. For fuck's fucking sake, man, put in a fucking red week. So with that, I'll have your trades, I'll have your email, I'll have your charts, I'll have everything out for you for tomorrow morning before the opening bell. And again, with all the shit that's going on with Trump, some of you are cunts. I know this. Some of you are cunts. Try and not be a cunt. At least to people that you don't personally know, which are people in the chat room. You want to be a cunt to people that you sit back and drink a beer with. Keep your political shit to yourself, other than the fact that Joe Biden sucks, and no, you don't want Trump, but it's the best fucking choice out of the two. He's a hell of a lot better than Hillary as well. So enjoy yourselves, catch you guys in the chat room, and have a beautiful Sunday night and a beautiful Monday morning, because it's absolutely gorgeous here, and I'm going outside.